Hello, fellow investors. Welcome to the financial podcast and the first ever episode of Ass or Asset, which is something I just came up with. But in these episodes, we're going to discuss if something could be considered an asset or a liability or both. And my name, of course, is Lucas.
And my name is Marcus.
And today we are talking about houses.
Yeah. If it's an ass or an asset.
Yeah, so asset or liability. And before we dive into it, I think we should look at the definitions. So, definition of asset: an asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. Assets are reported on a company's balance sheet and are bought or created to increase a firm's value or benefit the firm's operations. An asset can be thought of as something that in the future can generate cash flow, reduce expenses, or improve sales, regardless of whether it's manufacturing equipment or a patent. In summary, I usually think of an asset as positive cash flow,
or a generator of positive cash flow.
Yeah, so it gives you money. But as you could clearly see in the definition, it's a bit more complicated than that, officially at least. Definition of liability. A liability is something a person or company owes, usually a sum of money. Liabilities are settled over time through the transfer of economic benefits, including money, goods, or services, recorded on the right side of the balance sheet. Not going to concern ourselves with that right now. Liabilities include loans, accounts payable, mortgages, right? Yeah. Deferred revenues, bond guarantees, and accrued expenses. So again, negative cash flow. It takes away money from your...
Or generators of negative cash flows.
Yeah, so it takes away money from you. To keep it simple, stupid. And I think you quite quickly see that a house can kind of be both. Because you usually take a mortgage on a house. But it also...
Generally, it's very rare that you would buy a house outright. So you will end up with a loan that will accrue interest over time.
Yeah, but it can also reduce your living expenses with time, and it increases your overall value because you can sell it later on for maybe even an increased price. So that's why this is sort of a doozy, and thought it could be fun to start with.
So we could probably start with the positives and the possible incomes you can generate from a house as a private person.
Yeah,
I think we're discussing now, not if you're a company.
Yeah,
you might set up your own company in said house, but you're still a private person in that case.
Yeah.
Yeah, we could start it obviously with that. If you buy a house or an apartment, you can obviously rent it out. Like, I think that's the most obvious way of generating money through a house in this case. That you would rent it out to someone else who will pay you a certain amount of sum each month, which will be a positive cash flow for you. Particularly if you have taken out a loan to finance this house, if the rent is higher than the interest that will be accrued through the loan, you are making a positive outcome each month anyway. Yeah. Particularly if it even covers the amortization of the loan. Yeah. It's even covering the interest and the actual amount you have to pay back to the bank. Yeah. Then you are in really good graces.
And this is what is called house hacking, where people do this, that they, for example, buy a duplex or maybe even a triplex. Is that what it's called? But basically so that they buy a big enough house that they can live in one and rent out the other parts of the apartment. And they cover their expenses, the mortgage, and what did you say? Immortalizing the loan.
Amortization. Yeah, paying
back the loan through the rent that they collect from the people who rent out from them. So that's something that you definitely can do, and it's called house hacking. Another thing you can do is if you have a studio from where you work. I guess this is what you meant when you wrote down this.
Yeah. If you are using the space to work, for instance, if you have whatever reason you need a place to make music, make art, write books, or do whatever, make small Legos and sell them on the internet, you need a space to do this. Then a house can definitely be kind of considered as an asset in this case. I mean, there's definitely places that you can do this stuff for free, like coffee shops and stuff like that. But in general, it's better to have your own space. And in that case, I would definitely count having a house would be better than not having a house.
Yeah, and similarly to this, a working area could be included in this
Yeah.
thing as well.
But of course you could do this through renting as well, but there might be issues if you're renting the area. For instance, if you can't change the working area as you want it, you can set it up better if you actually own the property. And in general, again, it's better maybe to own the apartment than actually having to pay rent to someone you might not even like each month. Instead, you could consider it that you kind of are paying yourself when you're paying off the house, because in the end it's going to be your own and you can still use the space to work, for instance.
Yeah. And the final thing in terms of why it could be considered an asset is if the location is a good one where you've bought the house, it's a so-called growth area, it might increase in value over time.
Yeah, and in this we could probably include flipping houses as well, that you buy houses that might be a little bit worn down and you renovate them heavily and then sell them at a profit. I think those are at least some of the most common way of making income from houses.
Yeah. Okay, so let's move on to necessities. Why it's because you're gonna need somewhere to live anyway, and so as I said, when defining an asset, it also counts if it's something that saves you money, basically. And since you're gonna need to live somewhere anyway, you're not gonna have to pay rent if you live in your own place. Although there's gonna be other costs, of course, but we'll come to that later.
And another way that you could use a house potentially, if you're not living in it, is that you could use it for storage, for instance, because sometimes you actually need this. In most cases, I don't think you're actually going to own a house just for storage. I know some people actually do that, though, here in Finland where we live, that they have an extra house where they just keep stuff. There's no actual people there, and then it's not really an asset, but it's more of a necessity, because if you didn't have the house, you didn't have any place to keep your stuff. And actually, the storage industry is booming as of right now, because people have way more stuff than they can actually keep in their house. So that might apply to you if you have, for some reason, a lot of stuff that you have to store somewhere. It might be better to have an extra storage area instead of paying a large amount just to keep stuff outside of your house that you can't fit in your own. Yeah, and possibly you could even rent out the house for storage, so you convert it into
an asset again.
Yes, an asset, like a storage facility where people can store their stuff and pay you a fee every month.
Okay, so let's move on to drawbacks, or why it could be considered a liability. For example, if you've taken a loan to pay for it, which I mean you probably should do, but still that's going to be something that you have to pay each month, meaning that it's going to take money out of your pocket.
Particularly with the interest that you have to pay, which will be just extra money that you have to pay to sweeten the deal, so to say, with the bank, because they want something to give you this amount of cash. And this can really add up over time, the interest that you pay for a house.
Although interest rates are really low right now, but I don't know how that's
but they might increase.
Yeah, it can't go much lower. But okay, continuing. Costs, even if you own the house, you're still going to have to pay a cost, or pay something like repairs, things like that. Also, this goes for apartments as well. Like, even if you own your apartment, there's still going to be vederlag, it's called in Swedish. But things you pay
for facilities, basically.
Yeah, and just to keep the apartment complex in order. So
yeah, and of course, it's also that sometimes when you are renting an apartment, say, then the water and electricity and maybe even internet is included in the price, but this will probably never happen if you're actually buying a house. So you will have to pay for all of these stuff yourself also.
And things might break down, and then you're gonna have to repair them yourself, and that's gonna cost you, of course, money.
Sometimes a lot of money.
Yeah. So you've written neighbors here. What were you thinking then?
That was just a joke, that you have to deal with neighbors if you have your own house.
But you have to deal with neighbors even if you rent.
Yeah, but then you can just quickly say, well, F off, and then you move. But if you actually own the house, you might be a bit more limited with your options.
But that's good. That's a really good point, that you're stuck. If you buy a house, it might not be as easy to sell. You might not want to sell it because you have so much money invested in it. So in terms of mobility, it's a really bad idea. For example, if you're a budding entrepreneur, I know a lot of people say that whatever you do, don't buy the place where you live, because you might have to move very soon and you don't know it yet.
Actually, I think that's very applicable to a lot of people, young people right now particularly. You don't know where you're going to end up working in the end. So you don't really want to put all that money into something that you might have to sell very quickly and probably at a loss, because you will have to do it quickly. Because if you can wait, then fine, then you can buy a house and then be prepared to sell it way down the line if you can wait for the money. But sometimes, if you know you're going to have to move very often, it's probably not a good idea to buy a house. You're going to be stuck there for a long time.
Yeah.
Or just lose all of that money in that case, because you can't, get them out, so to speak.
Yeah. So what do you want to still say about these two last points, fees and depreciation? What were you thinking here?
Well, for instance, there are fees also. I know that here in Finland there are fees for like having roads to your house. You might have to pay extra road fees when they come and collect the snow and remove it. Fees for all these kinds of stuff, which you probably wouldn't have to do if you lived in an apartment, for instance. You don't have to pay anyone to like go and collect the snow outside your apartment.
No, it's included usually in the rent.
Yeah, exactly. So that's definitely one thing. And then natural depreciation, I think. I don't know if depreciation applies to private persons, but anyways, the house is gonna get used, so to speak. So what you paid for the house, for instance, when it was brand new, might not be the price you might actually sell it for if you decide to sell it, unless you decide to renovate it completely or things like this.
Yeah.
So
very good point.
Yeah, it's basically gonna lose value, like most things.
Yeah.
Over time. And then finally, we didn't touch upon taxes, which you generally don't have to pay if you are renting a place. But when you own it, you will have to pay property taxes. To my knowledge, I'm not a property owner myself, but to my knowledge, from what I've gathered, they are generally not that high. It's definitely worth owning a house compared to renting if you have it completely paid off, because the interest is generally the like highest cost you will pay, and the actual loan, because you will have to take out a lot more usually than you have currently. But yeah, you will have to pay taxes also, but they are generally, they're not something that should stop you from owning a house if you really want to.
I think one final thing we could mention is loss of opportunity. As always, when you invest something, it might be money that you could have put in something better, but that's of course something you never know for a fact how well that's going to pan out. But I think it's such a large amount and it's such a large commitment when you buy a house or a good apartment, that it's going to be so much money that you put into it down the line that it might have been better invested somewhere else, and you just don't know.
For instance, the stock market, you never know. I think that's way too risky for most people, but it could definitely be a possibility that if you had put all that money instead in the stock market, you would have made loads of money instead of just paying off a house, which you might have to end up selling anyway.
But that again, that depends, because how much are you going to pay in rent during that time as well? So you would have to take how long are you going to have to live there before you sort of make the money back? That's something I think you should always take into consideration.
Yeah, exactly. But that's a very situational thing, which we probably shouldn't spend too much time on.
Yeah, but I just wanted to mention that. So I think in conclusion, when it comes to houses, if there are assets or just I would say both, but don't count on it being your only and greatest asset, because if it's your greatest asset, then it's an ass. You should have something else, because it doesn't generate a positive cash flow each month unless you set it up to do so, and at the moment I know most people don't, so don't count on it being your only asset.
Yeah, I completely agree with that. I would say that sometimes it's usually an asset most people need at some point, and in a lot of cases it's better to own the house than actually renting for, say, forever. But yeah, you definitely should take into consideration a lot of things, and a lot of things we actually discussed in this video, like if you will have to move soon, is it worth to actually buy a house in that case, for instance, because you are locking away a lot of money into this place, and it might not be a growth area, so this house might actually lose a lot of its value over time.
Yeah.
So there's a lot of things to consider, but it can definitely be both.
Yeah. Okay, so with that, I would like to thank you so much for listening to this episode of Asset or Liability, as I was going to call it, but I thought Asset or Ass was just more fun. And this week's episode of the Financial Podcast. What did you like of this format? I think it's nice, and we'll discuss more different things in
the
this
future,
format
yeah.
in the future.
Maybe things that aren't so clear also. I guess this wasn't so clear. You can say it's both, but maybe something that is actually more clear.
Yeah, and if you have any suggestion, something you would like us to discuss in this format, thinking of if it's a good thing, good investment, bad investment, asset, liability, put it in the comments and we'll definitely take it up in a future video. If you found anything helpful, please consider liking and subscribing. It really helps out. So with that, I would like to thank you for listening once again, and as always, happy investing.
Happy investing.